day.
There's apples under pressure.
You buy stocks on Tuesday and sell them on Friday.
The market is as volatile as you'll ever see.
Traders saying this is the craziest day they have ever seen in these markets. Veteran traders saying they've never seen anything like it.
This video is sponsored by the award-winning Daily Market Movements trading platform. To open a live or demo account, simply visit dmmtradingplatform.com. Hello guys, it's Max here from Daily Market Movements. Welcome to another episode where today we're going to be analysing the Nasdaq100 futures chart. Just before I start today's video, anyone who's interested in joining my Signal team, then please do not hesitate to visit my website, dailymarketmovements.com. I charge a very small fee of $29.99, and it's just a great way just to keep in the loop of the general markets. But let's have a look at the Nasdaq100. The final trading session of the week, of course, we've had Jackson Hole and Jerome Powell's just finished his speech, and would you look at that? The Nasdaq100 is currently down 2.54%, and it was only the other day that I kind of come onto YouTube and I said it's so tricky to predict where the market's going to be this time tomorrow or this time next week or even this time next month. It's just so difficult. Even the professionals are struggling right now. We're seeing hedge fund returns down significantly this year. And, you just can't do it. So what I'm going to do, I'm going to take a completely different approach. Who cares where the market is going to be this time next week? Who cares where the market's going to be this time next month? I want my time horizon to be 12 to maybe even 24 months time. Okay, so I want to start looking at this market from a much more longer term perspective because, as I showed you the other day, if I just zoom out a little bit as well, if we were to buy the markets the other day, so even now it offers an even better risk reward down to those all-time lows. Sorry, not the all-time lows, the yearly lows, which we achieved on June 16th. That represents a 15% fall from current levels. Well, let's actually even go ahead and adjust that because after today's fall, that has actually. There we go. So that would represent a 13% fall from current levels. And then if we were to trade the Nasdaq100 back up towards the all-time highs, that represents a 35.48% return towards the upside. So the risk-reward ratio at this moment in time, if we were to buy the Nasdaq100 now and target the all-time highs where we were trading just in January, guys, 2022, it is very, very attractive. So I actually want the market to fall down over the next couple of trading weeks, months, so that I can continue to dollar cost average. That's what I've started to do here. Until we have a clear break out of this downtrend that we've been trading in so far in 2022, I'm not going to put any significant amount of money to work. I'm going to open very small buy positions every 1 to 2% that we fall. Like during today's trading session, I'm constantly dollar cost averaging. And I actually hope that the market does go down lower because it creates value. I want to build up a core position here because guess what, guys? You only have to zoom out and look at the bigger picture. When in doubt, zoom out to see that over the past couple of decades, the Nasdaq100 has gone up and up and up. You look at the S&P 500. On average, over the past 100 years, it's returned an average return of 11%. And I expect the Nasdaq100 to do the exact same, over the next 50 to 100 years. So I'm looking to build up a core position here because I can promise you something right now. In 12 to 24 months' time, we're going to look back at this, at the start of this year, the worst start in 50 years in the stock market, and we're going to see it as a little tiny bleep. Okay, it's going to be a little speed bump across the road. So I'm looking to build a core position here because I know in 12 to 24 months' time, I will look back and I will, I'll be so grateful that I've done that. So sure, the market could go another 5-10% lower, but I want it to. I want to start dollar cost averaging lower because ultimately I fully anticipate this market to go higher, and I'm bullish. If you are a long-term bear in this market, you will lose money because you're betting against America. I am bullish on America, and I think that there are still so many more positives to come in the next couple of decades, especially as AI starts to develop as well, an electric car boom, etc. So I am bullish here for the Nasdaq100. I'm buying longer term, aiming back up towards those all-time highs and having a calculated risk investment just in case if we do go lower, it should benefit you in both.
There's apples under pressure.
You buy stocks on Tuesday and sell them on Friday.
The market is as volatile as you'll ever see.
Traders saying this is the craziest day they have ever seen in these markets. Veteran traders saying they've never seen anything like it.